Hi, this is Dan at Master Trader, and this is going to be a video review of 3 option credit spread trades that a subscriber sent to us who is interested in our new Mastery credit spread course, which is phenomenal. 14 detailed modules. If you want to master this subject, that's how you do it. Take the course. But I started to answer his email, and I said, let me just do a video lesson because it's easier to talk and show charts at the same time. So we're going to review 3 trades here that Joel sent to me. He said he entered credit spreads around March 10. The first one here is Caterpillar. So here's March 10, and right there, so that was a 2-bar pullback into a wide range bar on major support. Our entry would be over the high of that bar, so there's nothing wrong with that trade. It's actually a fairly compelling setup, and then it made a new high. But then with the sell-off in the broader markets, Joel, you didn't have proper risk management. Joel's email said, well, you know, this one's selling off because of the China tariffs. Well, I don't care why it's selling off. We are chart traders at Master Trader. And before we enter a stock or option trade, you have to have a compelling setup, and it's either a directional trade where multiple time frames are in alignment, or it's just an income trade where we're getting paid to call a short-term top or bottom. So this one was an adequate put spread over the high of that red bar. We would sell a put spread under this prior pivot. So the 150 or 151 puts and below. And then you can do the spread width however you desire. But this was a breakout failure. Wide range down. The very the next bar after this breakout took out this first point of support, which was this prior pivot low. We would have been cutting at least half of our position on that day. But the back half down here, and it's danger here. Topping tail deep into here, broader markets falling. And then, you're unfortunately still sitting in it, hoping that it's going to bounce back. We've actually, in our green room, been watching this for a new trade. We watched it on this day, 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 on this day. Every single day. You could go back and read the text of our green room. We analyzed it on multiple time frames, and my answer was the same every day last week. It is not ready. It is not ready. It is not ready. I still will watch it for some type of reversal on a daily and smaller time frames, meaning like an hour and 15-minute chart. But, it's on major support here on the weekly now, but there's 0 signs of stabilization right now. So, Joel, you were also asking me, well, what about okay, I missed my stop, or you didn't have one in your trading plan, whatever the case, that's not how we trade. Well, our batting success rate is 85% plus on these credit spreads. We do take losses, and this would have been one that we would have taken our loss and stopped out of. But we would have been in minimal pain, not massive pain. So you asked me about, well, what about selling an out-of-the-money call spread to leg into an iron condor? Now, we do that frequently at Master Trader, but the chart has to suggest it, the second part of the trade as an adjustment strategy. If we think it's getting close to a reversal, far from its moving averages, this is not the ideal time to sell out-of-the-money call spreads, because then if it does bounce, then the call spread is going to go against you. So there's no great management on this right now because you missed your ideal stops. We would have, again, been at a half of it here, and maybe all of it here, particularly with the broader markets selling off. Let's go to the next one that for Joel, Adobe. June 10 he got into, abouts, he said. So this is, or I guess June 11. All right, so let's analyze what we have here. It went up, wide range down bar, took out 1, 2, 3, 4, 5, 6 lows of bars in one day. That's a sign of damage. It did come back. I wouldn't have predicted that quickly, but the proper entry, we actually did this trade ourselves. See this controlled 3-bar consolidation in the top range of this wide range engulfing bar that negated the gap down, no tail, rallied all day long, closed to all-time highs, bullish consolidation in the top 50%. That is the proper entry using the master trader method, master trader strategies. Then we sold our put spread under the low of this bar, and we managed, we're in management mode, so I can't tell you the exact numbers because I don't remember, but we took half and then trail stopped out of the back half for a nice profit. This was not the right time to enter, so we wouldn't have been in the trade. You're still in it, and it looks lower to us. So this one at least would be a better candidate in selling a bear call credit spread, even though it's 3 bars down. It's kind of a head and shoulders looking thing here. Left shoulder head, so that's a breakout failure, bearish gap down, consolidated, and making new lows under these bottoming tails. You have a toppy weekly chart over here, topping tails far from the 20 and 50. This one looks lower to us, and you would be okay, in our opinion, selling a credit spread. But again, our stop would be under these tails if you were in it from over here. So we wouldn't even be having to have this discussion of how to defend this thing going against us. Finally, ABBV, you asked me about. June 10. Okay, so right on this breakout, I could see it. It's just not an ideal pattern. It was a deep retracement back to the 200, so that's a logical place for many funds to start buying. But if you notice the overlapping bars, it's sloppy. It's not a quality bullish income pattern to us. But nevertheless, let's say you're in it on that breakout. I would say, okay, you have to sell a put under, these pivot lows, and you have to just manage in between, which would mean taking your stop under this pivot low. That's the end of the story. So here's another one that we wouldn't have traded it, but even if we did, we would have been stopped out at a small loss, and you would have made some time decay over time. But it looks like it's coming deeper into these prior lows to us. The weekly chart came down hard in these 2 bars, stabilized for 2 weeks, and another wide range down. So both of these charts look lower to us. So I hope that helps. Strongly urge you to check out that mastery course. I guarantee you will look at credit spreads different, with an appreciation of compelling pattern, picking the right strike, picking the right expiration, and proper management in between. I can give you so many examples from people who have different rationales on trade management. They say, well, I just hold it to expiration and wake up and see where I am. Some just roll in perpetuity, which is a losing proposition. Some say, well, I'm just going to wait until it violates the short strike. But then you could turn many winners into losers in all 3 of those naive approaches. So we believe our approach is the best, compelling pattern, manage in between, both in terms of taking profits and taking protective stops when the pattern fails. So I hope that helps. Don't forget to subscribe to our YouTube channel to continue to get valuable information on trading and investing, stocks and options in the market. Happy trading.